hear me okay? The sound's coming through, and if you can see my screen, can you please let me know if it's all good? Hello, hello, welcome. Cool. Okay, all good. Great. Let's get started. Excellent. All right. Three, two, one, and we're off. Welcome to the webinar today, guys. Thank you for your time. Thanks to all of you watching the recording. So here today we're going to talk about how to manage trading outside of all your other, hey Nick, all your other issues and um, commitments, essentially. I know most of the traders watching this probably are either one, retired, or two, you have another job outside of trading. That's probably the case. Some of you may be full-time traders. Um, and if that's the case, I'm sorry to hear that. No, I'm kidding. No, yeah, it can be a lonely existence, obviously, which is why it's great to have these webinars where you can learn new things and connect with other people, forums and things like that. That's why I love it, because tell you what, it's pretty boring otherwise. And I've learned the most exciting advances in my trading have come from students, interacting with students, interacting in groups with traders, and learning new things and slightly different approaches. So I really get into this stuff. So what are we going to talk about today? First of all, who am I? My name is Walter Peters. I wrote the book called Naked Forex. You may have read it, may not have. I don't take offense if you haven't. It's about trading without indicators. I also have a PhD in experimental psychology, which means I can mess with your brain. Just kidding. So, psychology is interesting because a lot of people will say, well, what does that have to do with trading? Why aren't you using your PhD in psychology? Obviously, as you know, there is a lot of psychology in trading, and that's some of what we're going to talk about today. Hey, Ahmed, welcome. So we're going to talk about this idea of making snap decisions. Now, I want you guys to come up with a chart. And we'll use your chart as an example about, and show you kind of how this might work. Okay? So, you guys can show me a chart that you would like to see. Then we'll use your example chart. So which chart shall we use? Any ideas? Any ones that you like? I don't want to do the euro. I want to do something different. Ideally, we'll do something outside of the euro. That would be ideal from my point of view. From my point of view. Like let's try one that maybe not everyone trades. Like pound CAD. There you go. I'm going to go to the pound CAD weekly chart. I'm going to go ahead and draw my new favorite template is a red and white template. This is the weekly chart, and I'm going to go to the line chart. This is exactly how I make my trading decisions every morning and every evening. But I know from my scan of the charts that can take as little as 10 minutes or even less than that in the morning. I know what I'm going to be trading in the evening. So where I live in Australia, where I am, the daily candles close in the morning, and then the London session is in the early evening right now. And then New York is kind of in the later evening. So what I'm doing here is I'm pulling up the pound CAD weekly chart. I'm going to the line chart, which is essentially a one period moving average on the close. Not much more than that to it, really. And I'm drawing these lines at support resistance levels. That's where we find both whoops, I almost had it. Resistance, and we find support. Ideally, we will find both resistance and support at these levels. But sometimes, if it's an extreme high or an extreme low, you only have one of those. We've got some support down there, don't we? Support in 2011 comes up in 2013 again, like magic. The market remembers. All right, so these are the spots I'm looking for a trade. So here's why, here's how, and here's why you can do this. I'm going to give you lots of systems, guys. So pound yen and Aussie will come next. Cool. Cool, cool, cool. All right. So we will look at those in just a moment. But right now, I'm doing pound CAD. Pound yen's awesome. I love trading pound yen. Okay. So it looks like there's probably another one here that I just missed, and probably another one here as well. Something like that. Probably another one here. Then maybe another one there. All right. So now that I've gone to my weekly chart and I've drawn in my support and resistance levels, now what I want to do is go to my daily chart and essentially I'm waiting for the market to get to these levels. All right. Now, so the first thing I do when I scan through my charts is the question I ask myself is price at a support and resistance level? If the answer is no, then it's flick onto the next chart, right? It's as simple as that. So all right. So again, this is only going to work if you have a job and you have or you just don't want to sit in front of the computer. As we all know, the amount of time that you spend in a car or watching. So that if you take the number of minutes per week that you spend sitting in front of the TV, which also includes your computer, or sitting in a car, you add that up, that will predict your waistline, right? So if you watch a lot of TV or play a lot of video games or do a lot of trading or spend a lot of time in traffic, driving, whatever, that's going to balloon out and we're going to get unfit. And being unfit's not good for trading, right? We know that we think better when we feel good. So how do we do that? Well, one thing you can do is cut down on the screen time. Don't freak out on your trades. Don't let them whip you around and emotionally abuse you. Instead, what you can do is simply do this. All right. So the number one thing I ask myself when I look at my daily charts in the morning is number one is the market at a zone? What's a zone? It's one of these lines on the chart. Is it at a support and resistance zone? That's the question. It's a simple question. Is it at a zone? Now, really, what I should have done is kind of slightly adjusted these after, after I drew them on the weekly, like kind of go like that, and like that. Just sometimes you just kind of have to make it. That one's actually, these are actually quite good. These are all pretty good. Sometimes they're just a little bit sloppy, and you just kind of want to focus it in. Like this one, here's another one. This one I might also kind of move up just slightly. But otherwise, and maybe this one too. Like that. Okay. So there you go. So that's basically it. So now there's two important zones here on the chart, given where we are, right? And the first one that's important is this one. And the second one that's important is this one. These are the two most important spots on the chart. Why? Because price is near them. So, is the market at the zone? The answer is yes. The pound CAD is at a critical support and resistance level. The second question I ask myself, if the answer is no, flick onto the next chart. Simple as that. Next. Nothing to do, nothing to see here, keep moving, right? From the movie. Do you guys know that movie? Nothing to see here, keep moving. I think it's The Naked Gun. Okay. Is the market at a zone? Number two is, has it printed a pattern? So a repeatable, reliable pattern like a ghost peak or a pogo or a moolah or a whammy or a kangaroo tail or whatever. Doesn't matter. Has it printed that? If the answer is no, flick, close the chart, on to the next one. The answer is yes. Then you have to ask yourself, where shall I enter? Where's my, oops. Also, where's my stop? And where are my targets? If I use targets, I do, or if you use a trailing exit or whatever. Okay? So that's basically it. Is it out of zone? If the answer is yes, has it printed a pattern? If the answer is yes, then I say, where do I need to get in? And then now what I can do is put those on my chart, put those in my journal, write down the number. So for example, in this instance, it hasn't given us a pattern. This morning, if I was looking at this chart, so not today's candle, because this is all of the Asian session, a little bit of the European session, right? This candle right here is the one that I would have seen this morning, and I look at this and I go, is it a reliable pattern? The answer for me is no. Now, maybe for you, there's some sort of voodoo pattern there that I don't need to use or see, but there's nothing there for me. That's not good. That's a no good pattern, right? So I go next and go on to the next chart. Does that make sense to everyone? Are you cool with that? You follow me? So those are the questions that I asked myself. Now, if the answer was yes, then what I would do is either you can do it on the chart so that when you open your chart up in the later on, like when you get home from work or whatever, you might see. Here's the thing: you could enter the orders in right now, but I don't do that because I don't want to be triggered during the Asian session. So in the morning when I wake up and the Asian session isn't even really started yet, it's just barely almost getting started. So the interbank period really, when I look at my charts, it's really slow. But let's say that I lived in London. This is what I would do. And I'll give you an example if I lived in, say, Chicago. Okay. So I live in Asia, so what that means is I wake up, the daily candles are closing or have closed. I use 5 p.m. New York time. That's my closing time. So then I go, all right, I flick through my charts, I find the ones that I like, and then I flag them. I'll show you how I flag them in a moment. Now, the next thing that I'm going to do is say, all right, I've got a trade here on the pound CAD. Do I enter in my trade? Now, my answer is no. I just flag it, and then I come back right around the time that Frankfurt is trading, right around the time, an hour or so before London, to see what happened during Asia and to enter in my order. Now, if the market goes to my stop loss price during Asia, then obviously it's no trade. Also, if the market pushes through my entry price and goes like 70 pips, that's also no trade. So if it takes off without me during Asia, or if it goes the other direction really hard, it should go the other direction, but not really that hard. It should just kind of mess around and slightly go against the expected direction. Then I know, okay, cool, and then I'll set up my orders, put them in my platform, and again, you can walk away. If you're watching 20 pairs, there's no reason why it might not take you 10 minutes in the morning or 10 minutes in the evening, and then 5 minutes in the evening, or 5 minutes in the morning, depending on your time frame. So here in Asia, I look in the morning, I decide what to do, I have a watch list, I have all my levels, I have all my prices, all my targets, I write them down, and then I go away. Don't watch the charts. Now, if I lived in London, what I would do is I would do that right before I went to bed. So right around, let's say I went to bed at 10:30 p.m., I would look at all those charts. It would take me 10 minutes. I would flag the ones that I like that have given me a repeatable pattern at a support and resistance level. I would write down my profit targets, my stop loss, and my entry price. And then in the morning, I would get up pretty early. Like I would try to get up, I'd try to get up at 6:30 a.m., which for many people is not a problem. And I would give myself an opportunity to log back into my platform and see if, again, has the market gone really hard without me overnight during Asia? If the answer is no, then I'll put my order in. Has the market gone to my stop loss level with or without going to it doesn't matter if it went to my entry price. It doesn't matter if it goes to my entry price. What matters is, does it go to my stop loss level? If it does, then I know that, okay, I'm on the wrong side here. I don't want to take this trade at all. Forget it. Next, go on to the next chart. So is everyone clear on that? It's pretty simple stuff. Really, really simple stuff. So it's just sort of, is the market out of zone? Yes or no? Has it given me a pattern? Yes or no? What's my stop loss, my entry price, and my target? And then I come back later. Now let's say I lived in Chicago. If I lived in Chicago, I would do it's a little bit tricky when you live in the US or in South America or whatever, because I know some of you are watching the recording from the U.S. or from Mexico or whatever. What I would say is you kind of have to play it. It's tricky. So what you want to do is essentially put your orders in right before you go to sleep. So like if you lived in New York or Miami or Chicago, let's say you go to sleep. I would try to go to sleep as late as I could, possibly, if I lived in one of those time zones, because I want to give as much, room for the market to move during the Asian session as possible. In other words, I don't want, I really, what I'm trying to do is avoid having my order placed during the Asian session. So if I lived in Chicago, maybe at 11 p.m., I would put my orders in. So I might only just look at the charts once, ask myself, is this market at a support and resistance level? Has it printed a repeatable pattern? What is my stop loss, my entry price, and my targets? And if I get to that number 3 question, I would actually put them in my platform and go to sleep. The reason why I do that is because I want to be triggered during London. And if I'm not triggered during London, I want to be triggered during the New York session when I get up in the morning. So I really, really want that volume to push me through my entry price. I don't want to get in during Asia, which is why I'm saying, I want to stay awake as long as possible, which is not that difficult if you live in Miami, but a little bit more difficult if you live in Vancouver, so because of the time difference. All right, cool. So that's basically it. So now let's look at some other charts here, and I'll do the same thing. We'll set them up. We'll get the charts going and set them up. So let's say, see how my charts are set up here? They're a little bit messy now, but what I do is, if I have a potential trade, then I pull I pull the chart out like that, and I stick it out like that, and that means I got to go look at it. Okay. If I don't have a potential trade, I push it back in like the Aussie yen and the pound CAD. They're just kind of there's kind of back there, So that's kind of how I do it. So I do it like that. All right, so let's go ahead and go with the Aussie and the pound yen. Okay, pound yen. Again, if I were trading the pound yen on a daily chart, I'll go ahead and put my weekly chart up there. Go to the line chart, back it up, look for support and resistance. There's the resistance. There's the support and resistance. There's another support level. Ideally, these are going to be both support and resistance. Also there. Also there. Also. No problem, Nick. All right, let's back this bad boy up a little bit. Now, what's cool about when you do your scan on your daily charts, you can also do weekly, but weekly only has to be done like once a week, once or twice a week, basically, which is just awesome. And I don't know how many of you have been trading for a long time, but does everyone remember that Head and Shoulders? That was one of the coolest things ever, like in trading. That was definitely one of the coolest things ever. When we all saw that, we were like, oh, it's going to tank. Yeah, that was pretty awesome. That was one of the coolest, like just knowing that you were going to be riding the pound yen and selling that sucker. That was just a really fun time. Here's to financial collapses. Okay, let's keep going. Cool. All right. So, okay, so that's basically what I'm looking for. Now, what I'm going to do is back it up and boom. What's my first question? Is the market at a support and resistance level? The answer is no. So there's nothing to see here. Keep moving. I would probably be tempted to slightly adjust that one down to include this and that. That's the thing about the higher time frame chart. Even though you get the best zones, sometimes it's a little bit sloppy. And likewise, I would probably be tempted to move this down a bit too. I'm thinking about capturing all these. Yeah. But other than that, it looks pretty good. Yeah. Yep, looks pretty good. Probably. Sometimes you'll look at them and go, you know what? I should have had one here. You can put those in too. That's about it. Yeah. So we don't have a pattern, so we move on to the next one. Now, sometimes what you'll notice is the market's like approaching. Let's say that we were printing candles, in this area here of the chart. Well, we could flag it going, tomorrow maybe it'll hit that level or something. It's only 150 pips away, which is, if you know anything about the pound yen, that's like, it's really, really close. So yeah, so you kind of just wait and see what happens. Yeah, so that's what I would say about that is if you're close and it looks like it's approaching, it could make a double top or something like that. You can also flag it. But really, every day, if you're checking the charts every day, no, it's not there yet. So this is one that I'd say, no, it's not there yet. So if the pound yen were to come down here and hit 138.80 and print some sort of breakthrough or reversal pattern, or if it were to go to 147.80, I would, and print a breakout or a reversal pattern, and I would look for a trade at those levels. So that's hopefully that makes sense. Let's go to the Aussie. Now I know it's taking me time, like some time to do this. I keep looking at this because I have a trade on this pair. Just wondering how my target is up here. Just watching it to see if it's probably, I don't know, it's probably not going to hit it tonight. But let's go to the Aussie. So again, we'll go weekly. We'll look at my old faithful red and white platform or template. Back this sucker up. Have a look at these lines. Where are the squigglies at? There's the high, there's the low. Draw the rest of these in here. That's a brilliant. Look at that. Resistance, support, 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 resistance. I love it when it does that. I just love that. When it just screams out, trade me, when it gets to those levels. Okay. Another really good one right there. So obviously, once you have these zones all drawn on your chart, now I'm going to get into the systems in a minute, okay? So I know some of you are getting impatient going, I know how to draw my zones. Some of you are going, oh, this is cool. It makes it easy. And some of you are going, I get it already. Move on to the next thing, which is going to be, what kind of pattern do I look for when it gets there? And, you can break them down to just like 2 or 3 styles of patterns, really. All right. I'm going to go with this. This is going to be I could probably put one in here too if I'm careful about where I put it. Okay, so this is my daily, and see how we look now. So again, it looks like the answer is no. The Aussie is not at a critical level. I happen to believe that 77 is actually a pretty good level. So my answer is yes, it is at a good level. But that one didn't get captured on the weekly. It didn't show up for me. And sometimes that'll happen. When you go in the higher time frame, you draw your zones, and then you'll still need to mop it up a bit and get a couple of them in there. Okay, so what I believe is the 77 or 60, 76, 90 level is really important. I think the Aussie is doing a squeeze play. So let's start talking about some of the patterns. One pattern that's pretty cool, there's 2 ways to trade it that I like, which is the squeeze play. What is the squeeze play? And this doesn't look very good on the daily. It's really more of a 4-hour on this particular chart. but it can happen on any time frame. Essentially, what we're looking at here is the trend line that forces price into a zone on your chart. And this has been forced once, twice. That's not quite three times a lady. That's three times, four times, almost five times. We've run into this level, and we keep making higher lows. Well, there's a little bit of a wick there. So this is a sign that what? This is a sign that this is probably going to pop. It's like a geyser. It's going to go off. It's going to go whoop, and it's going to go really, really far. And in fact, this is the reason why I'm in that, that Aussie yen trade I was showing you. Um, this is actually an awful look at it, but essentially my Aussie yen is probably the easiest way to see this is on the 30-minute chart. So basically what I had here on my Aussie yen was this. So this was a squeeze play on the Aussie yen. And what happened was I said, so it was trend line. Well, hold on. Sorry about that. Yeah, so here's the pattern right here. Trend line, pushing it up against the horizontal level. But the problem was this. What made this one so tricky was this over here. I don't like to have higher highs over to my left. So I actually put my order above here at 87.51. And then you'll see here, sometimes you'll get this reversal pattern, which is it'll go and then it'll come right back down and fall below the line, below the zone. And that's what happened here. And then it did it again. The only time I'll take these dueling kangaroo tails, double kangaroo tails, is when the second one's bigger. This technically isn't a kangaroo tail, but the market didn't really trade lower than it anyway. The low on this candle is 87.17, and the low on this one is 87.17. So it really needed to go like, 3 or 4 pips lower to click me in. If I would have traded a reversal here, I didn't. I was looking for the breakout, and I got in, on this candle basically. Might have been this candle, but I think it was that candle. And so now I'm just kind of hoping that it keeps chugging higher. But I wanted to show you this because it's an example of a squeeze play. So that's one pattern, okay, that you might see. Right now, I would say that the Aussie is offering a potential buy opportunity. The two ways that you can trade it, the reason why I like this one much better than the Aussie yen is it's so much cleaner. You don't have any higher highs over here. So the way I do it is I put an order, either you put an order well and truly above the highs over here. So that might mean an order up here. And you always want to get in cheap. You always want to save pips. You always want to have a good reward to risk ratio. But it's worth it to wait for it to go to 77.09 than trying to get in at 76.97 and watch it click into that and then fall back down to the trend line again. That's no fun, right? So you want to make sure it definitely clears it. Now, the recent swing low makes a good stop spot. So in this case, you're looking at like 95 pips, 94 pips, something like that. You put it below that wick. If you just put it below the close, though, you could save yourself some pips, and that would be, risking 75 pips or something like that, 73 pips, something like that on a 4-hour Aussie trade. So does everyone see that? When you're placing them, how can you speak more about how you decide whether it's support or resistance? Okay, cool. Yeah, no problem. So here's what I would say about that. The best support and resistance is a level. I got to take away this trend line. We'll talk about more setups too in a minute. The best, and by the way, this right here, this weekly pattern, not this week, but the previous 2 weeks, that's also a very bullish pattern to me, a very bullish one. So all signs point to see you later. I'm exploding higher for now, Aussie. Let's talk about this idea of, how do you know that it's a good support and resistance level? Like, what's the criteria? Well, for me, the best support and resistance areas on the chart are going to be those areas on the chart where it has really nice, clean bend right around that resistance area, and that's followed up later with a really nice, clean support bounce, right? Now, I know that this one right here doesn't probably look that good because the close is so high, but I'm willing to bet, and I could be wrong here, but let's see. I'm willing to bet that the wick of the candle did get down here, and maybe even the open was down here on support. Okay, so let's take a look at that candle. Looks like the candle low was at 102.43, and the zone I have here is at 102.26. So it did actually. 20 pips on a weekly chart, that count for me, that counts as a touch. So here you go. See? Here's the candle that I identified. Again, because of the closes were so high, it looks like it didn't hit it, but actually you can see even the next candle did touch it almost to the pip, right? So the easiest way to see these is to go to the line chart and to wait for those zones that you see where you have both support, as we do here, 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 and here, and then resistance at the exact same spot. And the best ones really to me are like this one right here. We have multiple 1, 2, 3, 4 support touches, and then finally it breaks through. It comes back and touches it again to confirm it. I have a friend in France. His whole trading, his whole method is just capturing that move right there. That's all he does on the daily, weekly, and 4-hour charts. He waits for the market to break through a level, come back and touch it, and that's where he gets in, and that's it. I mean, it's an ancient thing, man. You can look back in old, price action stuff. That it's a confirmed breakout is what they would call it, like in 1929 or whatever. So that's basically his whole strategy. Dennis, he's a really good trader. I think he's a cool guy too. All right. So does that make sense, Joe? Does that help about, when do you know if it's support and resistance? All right, let's talk about other spots or other things that I might see when the market gets to support and resistance, like other patterns. Here's one right here, actually, for a trade. Awesome. Awesome, Joe. Thanks for the enthusiasm. I gotcha. Joe says, yes, thank you, with an exclamation. I love it when people, because, it's so hard to know what people are thinking when you do these webinars. You don't know if you're getting, like if you're talking in circles or if people are getting you. I try to be as clear as I can. All right. So, I'm not trying to talk down to anyone here. I'm just trying to be as clear as I can be. That's all this is about. All right. So look at this. This was a sell off this pattern. So again, when I woke up on this day and I looked at the chart and I said, is the market at a support and resistance level? The last 4 or 5 days, the answer was yes. The market was at a support and resistance level. And then I move on to question 2. Is there a repeatable pattern? The answer was no, 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 no. If anything, I thought that there might be a squeeze play like we were talking about before. Maybe it was going to pop and squeeze out of there and get out of there, and then maybe that's what was going to happen. You could see kind of the market marching up there. But instead, we got a kangaroo tail. This is a bearish setup. Stop loss goes above the high. Sell stop went down there. I think it was at 73. So 72.73. Yep. And then right now, and the stop loss was up here. It moved down here. It hasn't quite hit target 1 yet. It's come really close, like within 13 pips. So my stop loss has moved to break even now on this one. It's at plus 5 pips. So this one's either going to hit target 1 and target 1 and then stop me out at break even, or hit target 1 and target 2, or it's going to hit me at break even before it hits either of my targets. But it's not going to be a loser. So at least unless something crazy happens and it gaps over my over my stop loss or something like that. But that's an example of what I would call. So what is a kangaroo tail? The open and the close of the candle are in the bottom third, and this one just barely misses. That open is actually slightly outside the bottom third, but I still went for it because it was such a beautiful looking candle. It also has room to the left, so there's a lot of the candle that's printed in an area of the chart where we haven't seen recent price action. You can see all of this part of the candle is, you know, unique. It's printed in a unique area of the chart going back to here. It trades lower on the next candle, which is important to me. It traded higher during Asia, which is great. That's brilliant to see. And then it traded lower. So it triggered the trade. And the tail should really go through the resistance level, and the head should stay on the other side. It doesn't matter if it's bullish or bearish. That's really what we're looking for. So that's another example of a pattern. There's another pattern I want to talk about. Which is, let's see if we can find examples here, perhaps. No, pound yen is not a good one. Singapore dollar is probably not a good one either. Let's see. Okay, let's talk about this one. Actually, that chart's a little sloppy. I don't want to be too confusing, so I want to find a better chart. Another pattern that you might trade is, boy, that one's tricky too. See if we can find one here. I want to find a really nice setup so you guys can see what it looks like. Well, actually, I don't know that this is a zone here on the Euro Pound 1 hour, but let's say that you had a zone identified here. Here's another one that people don't realize. This is what? This is, if you added these two candles together, you would have a high up here, a low down there, an open here, and a close there. And that would be a two-hour kangaroo tail. So if I had a 2-hour chart, that would be a 2-hour kangaroo tail, and it was triggered in the next 2-hour candle. And I don't know that that is, I don't know that that's actually is a support and resistance level. Maybe that doesn't make sense to have that there. Maybe it should be like something like that, a little bit higher. But that's kind of what we could do with that one. Like you can add your candles together. Also, sometimes you get these really nice, weak-looking tops. Here's one right here. So look at this. What happens is the market goes, hits a level, and then, so the market's going up, 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 it hits a level, pulls back, comes back up and hits it again, but makes a lower touch the second time. So this is a moolah top. So the high on this touch is what? 86.43. The high on this touch is 86.38. So it's a lower high. And then we get a bearish candle. Now this one happens to be exceptionally bearish. Usually you don't get something that good. Usually you might get a candle like maybe like this one. Okay, so they're usually not that brilliant. And then what we can do here is with this moolah top, we go ahead and put a stop loss here. We put an entry price here. And I really need to wait for that bearish candle with the moolah top. The mirror image of this is the whammy, which has a higher bottom on the second bottom. Just like this is a lower top on the lower top on the second top, on the second touch, when it makes the double top. So it's a special case of the double top. You can see it was triggered there. It went lower. Right now it would be, so the risk on this one would have been something like 95 pips. And right now it would be up something like 67 pips. And it went almost 1-to-1, or maybe just on 1-to-1. But right now, at this stage, I would probably move to break even. If it stops me out of break even, then too bad, But that's an example of another pattern. The other one I really like is the big shadow, which is a special case of an engulfing candle. Many people are familiar with those. So when people talk about engulfing candles, often what I think they Like, for example, I think we actually had it on our first chart. What was the first chart we were looking at? I think it was pound CAD. Where is my pound CAD? Where's my pound CAD? I don't know. Um, there it is. So when I said, is there a pattern? Some people would see this setup and then actually say, yeah, there is. Hey, Walter, look what happened. This candle engulfed that candle. So it's a bearish engulfing because the body of this candle is bigger than the body of that candle. And so we can sell. We're on support. It's going to break through support and trade lower. And maybe it will. But for me, that's not good enough because I use a special case of the engulfing where we have a candle that has not only the body engulfs the prior candle, but the high and the low. It has a higher high and a lower low. It's a bigger candle than we've seen over the last 6 candles. And ideally, if it's a bearish one, it would be at resistance, not at support. So we want to trade off resistance and sell off for resistance. So you have resistance going for you and you have the pattern. Let's see if I can find an example of one. Is this? No, I don't think this one qualifies because it doesn't have a lower low than the previous candle. It does have a higher high, but also it doesn't have a lower low, and it's not bigger than this candle. So it's not the biggest candle we've seen in the last 6 candles. It's actually smaller than this candle in terms of the range. So that one misses on a few accounts. It also should have a very bullish close or a bearish close, depending on if it's a bullish or bearish engulfing. Here's one. So this qualifies. Okay, so now this one's tricky because it's at a support level, and there's another one here. But what you see here is it's the biggest candle we've seen in the last 6 candles. Completely engulfs the prior candle, has a higher high and a lower low, closes right up near the high. The next candle trades higher. So you can see this is definitely a viable trade. That's a definite. The risk on that one with the stop loss down there is 414 pips. And if you had held out, you could have had 695 pips or something like that. And then it would have stopped you out at break even down here. Yep. If you were holding out for more. So that's that one. Are there any other questions or any charts that you guys want to see? Send through some charts right now if you want some live charts. We have a few minutes before we have to shut down. I just want to make sure that everyone gets their questions answered. So this should hopefully make sense. First step, go to the higher time frame, like the weekly, draw in your zones using the line chart, and then get familiar with some patterns that you like to use. I like the ones that I've shown you, like the big shadow, the kangaroo tail, the squeeze play, the whammies, the moolahs, all of those and many more are my favorites. I want to show you the Acapulco, but maybe we'll do that in another webinar. These are the ones that I like to use. So, and don't take my word for that. Back test them in Forex Tester, get your own data, get your own numbers, make sure that they work for you. That's the key here. The key is to make sure that these suckers work for you. Because if I say, hey man, the big shadow gives me a 78% win rate, but for you, you're like, what are you talking about? It's a 49% win rate or whatever. Then don't trade it. Forget it. Go on to the next thing. Obviously, we see the market differently, and that's what makes the market fun. So, any other ones? Any other ones you guys want to see? I can show you. So I've shown you. So a couple of highlights. I'm going to probably take a squeeze play on the Euro Swiss if it can break down to 23 down here. Or 22, I think, is where my order is, actually. 106.22, I'm going to sell, so that's a bearish squeeze play. Also, I've noticed, if you go to my link here, it's not really, it'll just redirect you to a page at a broker. But if you go to fxjake.com/crowd, it will send you to the open position ratios at Awanda, and a lot of people are buying this currency, the Euro Swiss, which means it's probably going to fall. When a lot of retail traders start going long, and I mean, it's like 74% right now, last time I checked, earlier today, that means it's usually a downtrend. So that's why I have my order just outside here for a breakout move. If it trades lower, I'll get clicked into that. I think I already showed you my Aussie yen, and I've already showed you my Kiwi trade. Also, I'm going to sell New Zealand CAD. Um, it's, if it makes these little swing highs here on the 1 hour, I'm going to sell it and sell it all the way down here to 92.50 if I can. So it's 130 pips from where it is right now, something like that. Yeah. Because I think this is in a downtrend. I think the New Zealand CAD is in a really strong downtrend. So that's basically that. So that's it, guys. Thanks so much for your time. I hope you have a wonderful trading week. I really appreciate all of you coming to the live webinar, and I also appreciate those of you watching the recording. Thank you so much. Hope to see you at the next Naked Forex webinar. Take care. Bye, guys. Take care. Thank you. Bye. Thanks, everybody. Bye.